Hi everyone, welcome to the weekly Wyckoff session. So, like I posted in the community section, I'm including more crypto assets starting this week. I'll make the sessions shorter but more precise, so I can cover more coins basically. If you're new to this, these are the areas that my sessions will focus on, and also they are around two key concepts. So you'll hear me talk about the playground zones as well as the Wyckoff stages, and also some key price levels. Before getting into the details, as usual in every video, the disclaimer: this is for education and research purpose only and not financial advice. So let's begin with Hedera, the very first session. So the pink box, if you are familiar with my sessions, this is the short-term playground zone. The white one is the long-term. So right now, in the past 3 days, we just got staying below this short-term playground zone. So we have been there since beginning of December, so roughly around 2 months, and then we're now trading, or the price is hovering right below the support line of the zone. So there isn't much support level over here. So if we look at the left side, this was a big price drum. The price jumped from 20 cents roughly all the way to 31 cents without any overlapping trading price levels. So there isn't any clear support level over here. So on February 3rd, Monday, so it dropped right through until it reached this point where these two candles, the top of these candles were. So that's around 18 cents. That's where probably some people would have set their buy orders, and a lot of buy orders may have happened if we look at the volume bar. This may or may not be a good sign. So there may be some voice saying, okay, we want to stay in the short-term playground zone for longer. But looking at the past 3 days, this may not be the case. There may be a little bit of rebound, but the volume is really very low. So that's what we can tell from the daily chart. If we look at the longer timeline on the weekly chart, where I have marked all the Wyckoff stages, basically we're right after the secondary test. So, and also the price has dropped below the automatic reaction that's supposed to be a support line. So it's pointing straight towards the long-term playground zone. So it would probably return to it, or if we look at the last cycle right here in 2021 and 2022, right after the second test, after the automatic reaction, let me change the color to purple as well so it's easier to differentiate and compare. So the two automatic response or reaction here, and then the second test, same thing. After the second test, the price dropped to a level where a sign of weakness level is defined. So basically the significance of this one is, say if we have an automatic reaction, that's supposed to be a support level, but if it drops further, then that means the test has gone to a level where it's searching for a place where there are sufficient demand to bring the price back up. So that's what happened last round. So this time we're here. We won't be absolutely sure it will go straight back to the long-term playground zone. What could happen is it can happen similar to last time, find a support somewhere here, or it can be here or here as well, and then that's the support line for this time, and it will return to a level. Again, there could be two scenarios. One, it can trade between, like here, it traded between here and consolidated a little for 3 weeks roughly before it rise to get an up thrust. It does not mean it will happen again for this time, because up thrust and up thrust after distribution isn't something that happens every time. So it can trade a bounce back to, now the automatic reaction line becomes a resistance line. It may pause over there and then another round of second test or up thrust before it comes down, or it can develop in a way where it bounces a little and then like dies down subsequently. So from last time we can see there were 3 last point of supply. So it's a zigzag shape. It's not like a straight line falling down. So if I change this to a line chart, it's easier for you to see. So that's what happened last time. This time we are somewhere around here. So right after it fell below the automatic response line. So let's see how this developed this time for Hedera. If the sentiment continues to be positive for crypto generally, there may be a longer time period where the price will trade horizontally up and down somewhere between these levels, between the buying climax and the sign of weakness. That can be a trading range. Up first, I normally wouldn't consider that. You can absolutely draw a line over there, but usually it's short-lived, that kind of trade. If you're a day trader or even more frequent interval trader, obviously you can do a lot of trades during that period. That could be a few weeks. But if you're a longer term trader or swing trader, that probably that wouldn't be something that's of high interest to you. So that's for Hedera this week. I'll move on to the Sway coin session next. See you there.